The O Cannabis Conference and Expo returns to Toronto June 1st through the 3rd, and there's still some good booth locations available. This exciting event is free for cannabis retailers and will feature Tommy Chong receiving a Lifetime Achievement Award at the O Cannabis Industry Awards. For more information about exhibiting or to register to attend, go to ocannabis.com. That's OCANNABIZ.com.
Welcome back to The Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at some M&As, asking the question, what does it mean for investors as we've seen a plummet in the overall mergers and acquisitions industry? So we're looking at some layoffs as well as bankruptcies and potentially asking, what does this mean for investors? So it looks like April is a continuation of March, where COVID had negatively impacted capital raises. In the midst of an already weak capital raise environment in the cannabis industry, we recorded 4 capital raise transactions totaling almost $37 million versus 14 transactions and $191 million for the same period last year. All 4 capital raises were companies in the cultivation and retail sector. So this sector has dominated investor interest for more than 4 years. In the midst of COVID, it's become an even more dominant sector at the expense of the hemp and infused product sectors. So in other words, they're looking for property, plant, and equipment as collateral for taking on added risk. So 3 of the 4 transactions were debt-based financing that continue to be a prominent trend in the industry that's been reported on for the last year. So for mergers and acquisitions, it was recorded 1 M&A transaction versus 14 in the previous period. It's the slowest market for M&As. So the slow market for M&As is a direct fallout from the decline in the market valuations of public cannabis companies that have been the predominant acquirers in the industry. So there's weaker stock prices, and a diminished ability to raise capital has hurt the buying power of these public companies. With that, I expect a lot of hostile takeovers. That is the acquisition of companies that don't want to be acquired, but they're stock is so depressed or inexpensive relative to the speculation that you're going to see forced M&As or hostile takeovers where certain companies are buying up all of the outstanding shares in order to acquire that company. It seems to be kind of the calm before the storm. I would expect a lot of forced mergers and acquisitions to take hold as soon as people kind of get their financing together and get approval from the board to go out and acquire companies. As cultivation retailer, really the only ones that are making some progress, you'll start to see a lot of other vertically integrated opportunities arise, whether that's forced or appreciated. I think hostile takeovers are going to be that next wave regardless. And then some people are just going to be happy to get out of it. So that capitulation is starting to becoming more of a reality as time moves on. You are starting to see a lot of companies kind of pulling back and laying people off. So you're seeing some multi-state operators scaling back, laying off workers, shutting off operations, everything in order to cut costs. In addition to furloughs, you're seeing unwinding of deals. So Harvest Health and Recreation multi-state cannabis company called off its planned acquisition of a Verano Holdings. You're going to see Forefront Ventures slashing its corporate workforce by 40%, and the company delayed a launch of the marijuana manufacturing facility in California, citing challenging conditions. This is definitely turning into a consolidation period where everyone has to be efficient. You have profit margins, you have models that need to generate revenue. But with 17 million people filing unemployment, you're going to see a massive reduction in economic activity, and people are going to not necessarily buy top shelf anymore. So although Vice stocks do better, people are going to pull back more than normal. And there's nothing normal about this. This has never happened where we've had a complete global shutdown. So even though historically speaking, Sin stocks or Vice stocks will do better, I don't think anything is going to escape the carnage that is about to happen with a full-fledged decline. I think we've seen a dip with a false breakout or recovery, followed by a massive crash that we're going to have. And most of these companies aren't going to survive that second downturn. They're just going to give up at that point. And consumers are going to change their behavior as well. And so maybe that's going to change how much they buy or what they buy, but inevitably things are going to change. So with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.
Tell me, boy, you make me so bored. You need to walk the other way. I tell you once more. Please get out of my way. I don't want you no more.
We're done here, boy.
I know you think you're so fine, but you can't see clear. I've been wanting to
Hi, my name is Kira Reed, and I'd like to invite you to be inspired by the women who are leading in the cannabis industry. Each week, we will discuss empowerment, leadership, and what it means to be a woman in charge in marijuana, hemp, and CBD. As the founder of the Women Empowered in Cannabis community, I have had the great pleasure to get to know many brilliant and talented women who are CEOs, executives, politicians, advocates, and community leaders that are focused on creating a cannabis economy that is just, fair, and equal. We'll learn how these women make decisions, how they navigate a predominantly male industry, and what they're doing to level the playing field for women. I hope you'll join us.